Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steven Ehrlich, director of digital asset research at Forbes Crypto, to discuss the potential impact to the crypto space with House Speaker Nancy Pelosi just touching down in Taiwan. Steven, it's great to see you. As always, of course, there's a lot of buzz around her trip to Taiwan. How do you think the crypto market could potentially be impacted?
No, thanks, Jill, and great to be here again as always. So Bitcoin dropped early this morning along with stocks, as we saw investors kind of rush to safety, albeit briefly, with gold and the dollar going up in sort of correlation with, as you mentioned, Speaker Pelosi's trip to Taiwan, the highest level delegation to touch down on the island since 1997. So it is a pretty big deal. It's one of those real geopolitical events that does have an impact on markets, and some context here is really important. For one, China regards Taiwan as a renegade province that really belongs as part of China. The U.S. has a doctrine known as strategic ambiguity, where it really tries to keep its cards close hold as to what it would do if China ever tried to invade Taiwan or reunify it by force, and all that built on top of the added geopolitical pressures of Russia's invasion of Ukraine, President Xi looking to secure an unprecedented third post at a major Chinese Party Congress in a couple of months, and so tensions were certainly raised, and we saw a flight to safety since then. And Speaker Pelosi will be staying there overnight, so it's hard to know exactly what will happen. Since then, it looks like markets are starting to recover a little bit as the immediate concern about what might happen as certain planes getting ready to touch down has abated, but it's definitely something worth paying attention to moving forward.
And let's talk about Ethereum and Ethereum Classic. They've certainly had quite the move, particularly in the month of July. What's happening there?
Yeah, so this really is kind of an amazing trend that we're seeing. Ethereum Classic, which actually, for people unfamiliar, is the original version of Ethereum that broke off in 2016 as part of sort of picking up the damage from the DAO hack, a major event that led to the theft of tens of millions of dollars worth of Ethereum. Ethereum Classic is actually up on the year, I believe, as of yesterday, about 8%, which is pretty amazing in crypto circles. But what's happening right now is that Ethereum itself is getting ready to undergo a major transformation from what's known as a proof of work setup, which uses energy guzzling computers to solve computational problems to mine blocks, to a proof of stake setup, which is more commonly seen in other prominent blockchains like Solana, Algorand, Polkadot, et cetera, et cetera. And we're seeing essentially the chips falling from this, lifting up both sides. For one, Ethereum is growing. It's up about 58% or so over the last month, because as we get closer to the merge, people become more comfortable that it will happen successfully. It makes them a bit more bullish. On the other hand, Ethereum Classic, all these miners that have been mining Ethereum are going to need to find somewhere to go. They use very specialized hardware that is not useful to mine Bitcoin or many other cryptocurrencies, but it can be used to mine Ethereum Classic. So all of a sudden, you might see millions and millions of dollars worth of mining power move from Ethereum to Ethereum Classic, which should theoretically add to provide the network with more security, more users, more people to vest the interest to see it secure, and therefore both of those assets are rising. That said, it's really hard to predict what's necessarily going to happen next. We're still a long way from now till when the merge should happen, which has a target date of September 19th. And there's also no guarantee that those are the only two flavors of Ethereum that may exist, or the only, and Ethereum Classic might be the only cryptocurrency they can mine. There is talk about maintaining a similar version of Ethereum to the proof of stake Ethereum, which will be similar in every way, except it will continue to mine. Ethereum and Ethereum Classic are actually quite different despite the similar sounding name. So there's a lot that could still happen between now and the middle of September.
Right, and of course the risk is, a sell the news type of event, as you know, Stephen. Let's talk about hardware. Well, let's talk about hardware for a moment here. Hardware maker Ledger is reportedly in talks to raise $100 million. What's the significance of that besides the dollar amount?
Right. So this is unconfirmed, but about $100 million is a sizable investment, especially this year, with given how much the crypto markets have struggled. To be perfectly honest, last year that may have actually, I see that number, I might think someone's having a down round, but that's not necessarily true in this case. And it's being reported that Ledger's raising money at a higher valuation than it's achieved previously. There's a few things to note here. For one, it shows that there is continuous continual appetite among venture capitalists to invest in the industry. I believe it was just last week, a Variant Fund, a Web3 sort of focused VC fund, announced a $450 million raise. And obviously, we've seen Katie Haun launch I think it was a $1.5 billion fund. Andreessen Horowitz continues to raise money. So there is still this dry powder. But what we're seeing is I'm starting to see a little bit less focus, especially among the big rounds, on some of the fancy projects with complex token economics that seem to have kind of gone into disrepute, at least a little bit for now. And Ledger in particular, makes something known as a hardware wallet. This is a dedicated piece of equipment that's used basically to just hold Bitcoin so that people don't necessarily need to keep them, use an app and keep it with Coinbase or an exchange like Kraken or Voyager or Celsius, where people might see a number in their account, but they're slowly realizing that they actually can't get that money back when they want it because they don't hold it. Products like the wallets that Ledger manufacture actually let customers hold their own funds. No one else has access to them, so they know that they can always move them, custody them, withdraw them however they would like. So I do see a trend towards self-custody and just a general bigger appetite among VCs for infrastructure type plays as the market's trying to kind of get its legs back.
And finally, the SEC charged 11 people with fraud this week stemming to a $300 million crypto Ponzi scheme. What's the bigger story here?
Yeah, so the SEC is in a really difficult spot. I kind of call it like being stuck between Scylla and Charybdis in a way, and I don't necessarily envy SEC Chair Gary Gensler because on the one hand, they're being criticized for the activities that they do. Last week, I believe it was last week, they announced insider trading charges against a former Coinbase product manager, where he and a couple of friends front ran Coinbase token listings. They were criticized. Not necessarily for that. I think most people would agree that's bad, but they're being criticized for what was implicit in those charges was the belief from the SEC that those 9 tokens were actually securities. And so they're being criticized for regulation by enforcement as opposed to a more transparent, open, proactive process. And in fact, the SEC chair was criticized in public by a CFTC chair, a CFTC commissioner, Caroline Pham, for that very issue. At the same time, the SEC is getting some flack on Capitol Hill for not necessarily doing enough to protect consumers from some of these bankrupt crypto companies like Voyager and Celsius. The people at the agency are very well versed by this point on how some of those products operate. They knew, as many of us did, that the yields and interest rates that they were promised were probably unsustainable. And now that the cards are falling and Congress people are getting calls from their constituents for why didn't you do something, the SEC is getting criticized for that as well. I mean, in fact, I actually broke the story last summer that BlockFi was received a cease and desist letter from the New Jersey AG because one product that they offered, a BlockFi interest account, they believed to be an unregistered security. So this is an issue that had been on the SEC's radar for well over a year at a minimum, and they're getting some criticism for not acting sooner. This taking down of a $300 million Ponzi scheme is obviously a great start, but this definitely fits within the mold of the traditional like pump and dump Ponzi pyramid type scheme. So in some ways, it's the lowest hanging fruit that the SEC could go after, despite the relatively sizable dollar amount that was involved.
Right. So, Stephen, really what the challenge is that there's enforcement actions being put into place, but there's not enough concrete regulation that has been, the infrastructure for that hasn't been laid out yet.
Exactly. I mean, like proactive, like concrete legislation. And then also, it appears there's also an issue with coordination with other sister agencies. As you know, Jill, the U.S. has a relatively unique financial regulatory infrastructure where there's a lot of different sister agencies with some competing, complementary, and sometimes overlapping jurisdictions. And with something like crypto that gets a lot of attention, especially from a lot of people who are not necessarily financially savvy, that can definitely lead to some friction between agencies that are all trying to do the same thing.
All right, I'm sure we'll be continuing this conversation. Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.